Hello money magnets, it's your Uncle Charters here. I have to ask you guys, did you enjoy FOMC? You guys are looking at a 15-minute chart here, and pre-FOMC action was very choppy, not much happened, but it was still important to watch the context. Not much happened. False breakout of 636 level, false breakdown of the 635.5 level. I was watching this range, but overall it broke down this 636 level, broke down this 635.5 level. This buy zone that I was watching was very strong, hit the 634 level, broke that down, hit 632.7 level. Multiple levels were hit, especially that 631.5 level. For some reason there was buying pressure there. The bears just couldn't break down that level, and then there's the reversal, the squeeze right back to the upside right before the market closed. And with Meta and Microsoft looking the way they're looking, it's a good chance that SPY could head to a new all-time high tomorrow. But I tell you, when I look at Meta, when I look at Microsoft, this is going up based on earnings, and it's going up a lot. I wouldn't be too surprised if tomorrow there's a bit of profit taking. Now, I could be wrong. I could totally be wrong. But I see something like this. It could get a lot of people FOMO with Meta, Microsoft. Look at this big body green candle on Microsoft. And this could get a lot of people to become FOMO. And if a lot of retail traders get FOMO, the market maker is going to pull that rug. And I'm supposed to cover SPY right now, but Meta, Microsoft, they're all part of SPY. They're all part of QQQ. So if those ticker symbols start dropping, I would not be surprised if it affects SPY and actually put SPY back down. That's one case scenario that I'm watching out for. Another case scenario is that with these ticker symbols bouncing up like this, it could get more people to buy in, and it could end up continuing to go upwards. And if that happens and other ticker symbols join in on the bullishness, it's a good chance SPY will continue up to new all-time highs. But we have to look at the facts right now, because I'm talking theories and what ifs. But we have to look at the facts. What happened today? Well, we had our second close below the 5 daily moving average. We will see by tomorrow morning if that breakdown is even going to matter, because a lot can happen between now and market open tomorrow. So yes, it is gapping up, and I will take this gap up a lot more serious if it can clear 638 tomorrow. Once again, we've yet to do that. As a matter of fact, there's a lot of selling pressure around that area. 637.6 to the 638 zone. Lots of selling pressure. Even today, SPY just could not break that 638 level. So with this gap up and help from those other ticker symbols popping up, can the SPY get us to new all-time highs? If the answer is yes, and it clears 638, boom, 640 or higher would be in play. And I do still have that macro level, fib level at 644. But for these two breakdowns to truly matter, SPY must get back below 635.5. If it does, that would keep today's and Tuesday's breakdown intact. 634 and that critical level at 631.5 would be back in play. And of course, if we can break down that level, because we now know the source of the buying pressure, where the strong buying pressure is coming from, it's coming from that 631.5 area. So if we see that level break down, there's a very good chance we go and hit the 20 daily moving average, which is around the 627, 628 area. So let's try to simplify this. If we clear 638 tomorrow, then this gap up will actually mean something. 640 plus incoming. But if it doesn't mean anything, if it's a gap in crap, 635.5, 634, and the tough buy zone at 631.5 must break down. Here is QQQ also with the gap up. It's around 572.3-ish right now. I do have it was a supply zone at 572. It was my resistant level. But if QQQ can stay above it tomorrow and it stays support and it holds, 573.5 would be in play. This green line is actually one of my macro level fib levels, and if 573.5 clears, I could definitely see us getting up to 575. But once again, we always have to be open to any case scenario. So if 572 and 570 fails as support, I would be bearish in favor of pullback. We should head back down to the 566 to the 564 area. The reason that would make me bearish if we break down 572 and 570 is because so far lately that area has been a tough sell zone. So if the price gets pushed up from around this area, that shows that the market makers accept this area as a buy zone. Therefore, we should be able to hit those higher targets. But if it breaks down, that tells me the market makers does not accept as a buy zone just yet, and we should head down lower. Here is Tesla. They did break down 320.5, so that's bearish progress. But we did manage to avoid a breakdown of the 5 daily moving average. The 5 daily moving average is at 317.4. The official close on today's candle was at 319. It's right around one of my pivot levels. So tomorrow we still need to break down that 5 daily moving average to send us lower down to 315 and possibly 309.3. Good chance we head down lower. The main thing that must hold as resistance, the main level, is 320.5 because we broke that down today. But if we clear 319 and recapture 320.5, that's our trigger to go long, and we should be able to go back up to the 331.5 or higher area. NVDA, once again, using that 5 daily moving average as a buy zone, and it cleared one of my macro level fib levels, which is at 178.5, and nearly smashed my 180 level. It's currently above it now, and if it could stay above 180, my next macro level fib level is at 186.3. We'll see if they can hit it, but to hit it, it must stay and get above 180 and 182 to go hit that level. Because if we break down those levels, especially 180, we should be able to pull back down to 177 and 175.5 to retest right around where the 5 daily moving average is. And I tell you, I can't fully get bearish unless we break down that moving average. Overall, NVDA is still looking bullish. And here is Coin. Now, Coin did close a little higher than it did yesterday. That's bullish progress, but we have to look at the context of the charts. We can see that it's still, once again, rejected from the 5 daily moving average. So even though today's candle was a higher close than yesterday's candle, we're looking at this chart and it just still looks overall bearish, and it still failed to recapture that 382 level. So I cannot get bullish unless we recapture 382 and the 5 daily moving average, which is around 383.3 right now. We do that, then sure, I will get bullish and favor we go hit 385 and 386.5. That was today's pivot high, and if 386.5 can clear, I would definitely favor 390 and the 393.3 area testing. But once again, I'm looking at this chart and it looks bearish to me still. Stay bearish below 382 and 380, and I need to see the next support at 378 and 376 fail. There's a good chance we go hit 373, 371.7 and 370. I would not be surprised if we go even lower than that. And last but certainly not least, here is IWM. This is the 3rd candle in a row where IWM closed below the 5 daily moving average, and you can see that it's overall paying off with its 3rd bearish close, and it closed right around my fib level at 221.5 and is actually gapping down to the 220 level. Now that 220 level held as support today, but tomorrow if it fails, 218, 216 and 214 definitely incoming. Once again, I cannot get bullish unless lost levels get recaptured. 221.5 is the first level I'm watching, but that 5 daily moving average is creeping very close to my 223 fib level. So 223 is very important, as well as the 225 level today, which held as resistance. So if we are to get bullish on IWM, I need to see 221.5, 223 and the 225 levels clear, at least closes on the 15-minute charts or higher for me to want to enter calls. But right now, it's kind of looking bearish, guys. And yes, that's what I have for you guys today. I really appreciate you guys so much for sticking with Uncle and watching my video. I really do hope you found value in it. Thank you guys. Peace.